Hello everyone, welcome back to our channel where today we're breaking down the essentials of Social Security. If you're planning for retirement and want to maximize your benefits, this video is for you. We'll discuss everything from calculating your monthly payments to important strategies that can help you get the most out of Social Security. Let's get started. To start, let's talk about the basics. Depending on factors like how long you've worked for and when you start collecting your Social Security benefits, the amount you get back can vary significantly. The highest monthly benefit for someone that retires at full retirement age and has contributed the most is approximately 3,822. But this takes strategic planning because the average person only gets about 1,862, so roughly half of that as of 2024. One of the most common questions is, how are Social Security benefits calculated? Here's the answer. The Social Security Administration, or SSA for short, calculates your benefits based on your highest 35 earning years. They adjust each year's earnings for inflation, so your benefits represent today's purchasing powers. But here's something important. If you don't have 35 years of earnings, the SSA averages zero for any missing years, which will lower your monthly benefit. So if you're a few years away from retirement, working extra years can increase your payout and might be worth considering in your specific situation. The next big question is, when should you start taking benefits? Timing matters a lot in Social Security. You can start claiming benefits as early as 62 years old, but if you do, you'll receive a reduced payment. Full retirement age, or FRA, is typically between the ages of 66 and 67, depending on your birth year. Waiting until FRA, or full retirement age, means you'll get your full benefit amount that we alluded to earlier in the video. And here's where it gets interesting. For each year you delay claiming benefits past your FRA up until age 70, your benefits increase about 8% per year. This is called a delayed retirement credits, and it can significantly boost your monthly income. A quick example is someone that claims their Social Security benefits at the age of 62 might be getting somewhere around $1,200 a month. Something sizable, but can be difficult depending on personal financial situation. However, if that same person worked until the age of 70, they could bring that amount up to $2,100 per month. Social Security also has options for married couples that can help maximize household benefits. If you're married, you may be eligible for our spousal benefits, which can be up to 50% of your spouse's benefits. Importantly, this option doesn't reduce their payment. For those who've been married for at least 10 years, even divorced spouses may be eligible to claim benefits based on your ex-spouse's record. And if your spouse passes away, you could be eligible for survivor benefits, which are often higher than your own. Did you know Social Security benefits may be taxed? This depends on your total retirement income. If Social Security is your only income, you likely won't have to pay any taxes on it. But if you have other income sources like a pension, retirement account, withdrawals, or rental income, some of your Social Security benefits could be taxed. The IRS has a formula that considers both your Social Security and your other income. Depending on the result, up to 85% of your benefits could be taxable. You can even opt to withhold taxes directly from your benefits to avoid paying a large tax bill at the end of the year. Now that we've covered some basics, let's go over some practical strategies to maximize your Social Security. The strategies that I'm going to talk about are great on paper, and they're primarily there to increase your Social Security benefits with taking nothing else into account. However, one thing to keep in mind is that this might not be possible in all situations, and it can also impact our quality of life to a certain degree. So ultimately, we need to ask ourselves, what do we prioritize in our current age and at that age when we need to take these benefits? Now that we've covered the basics, let's go over some practical strategies to maximize your Social Security. Tip number one is work the full 35 years. As we discussed earlier, the SSA averages your highest 35 earning years. Ensuring 35 years of income avoids having zero income years that lower your overall average. Tip number 2 is consider delaying benefits if it's possible in your situation. If you're in good health and don't need the money immediately, waiting until the age of 70 can give you a significantly higher monthly benefit. Tip number 3, coordinate with your spouse. Strategic planning with spousal benefits can result in much higher total household income. Tip number 4 is monitor your income levels. Keep an eye on your income to avoid unnecessary taxation on your Social Security. In this situation, it might be beneficial with working with an accountant or someone who's more aware of the tax laws to give you a better utilization on your income and maximize your tax reduction in a legal way. And finally, review your Medicare plan annually. Make sure your Medicare premiums aren't eating into your Social Security more than necessary by selecting the best plan during open enrollment. All of this information was very superficial to some degree, but I hope that it was able to get you some information on Social Security and some beginner-friendly tips on what you can look for to maximize your Social Security benefits. Social Security may seem extremely complex, but a good understanding can help you make the best decisions for your retirement, whether you're just starting to plan or are ready to make a claim. Being strategic can make a big difference in your financial security. Thanks for watching. Don't forget to like and subscribe and hit the notification bell for more financial tips and retirement strategies. And in the comments, tell us, what's your biggest question about Social Security that we did address or you might want some more information on going forward?